Enjoy. Andy Flury from Algo Trader and Tim Bruenjes from Fireblocks. The stage is yours.
So, all resolved. Welcome, everyone. It's great to be here again in front of such a big audience. My name is Andy Flury. I'm founder and CEO at Algo Trader. Our key product, Wires1, is a digital asset connectivity, trading, and execution platform for sell-side institutions like banks and brokers.
And I'm Tim Bruenjes, Head of Sales at Fireblocks here in Germany. For the ones that have not come across Fireblocks before, we are a globally operating financial technology company offering institutional-grade digital asset security infrastructure for moving, storing, and issuing digital assets.
Excuse me, Tim. You need to speak into the microphone.
Okay, sorry. And I'm Tim Bruenjes, Head of Sales for Fireblocks here in Germany. For the ones that have not come across Fireblocks before, we are a globally operating financial technology company offering...
Sorry, again. I'm hearing from the regie that you should take it into your hand somehow because you're too quiet.
Can I take this?
Or you take one of the panelists' microphones.
Yeah, let me take this.
Then we don't have to reinstall anything. I'm sorry.
Ready?
I hope so. Have you turned it on?
Yeah, it's on, yeah.
Okay, I hope
Sorry again for this. So I'm Tim Bruenjes, Head of Sales here in Germany for Fireblocks. For the ones that have not come across Fireblocks before, we are a globally operating financial technology company offering institutional-grade digital asset security infrastructure for moving, storing, and issuing digital assets. We basically help banks build, run, and scale a successful digital assets business.
So Tim and I will be talking about the unifying the digital asset trading lifecycle for banks, how this would look in an ideal world, and what is already possible today. Let's start by having a look at the crypto market crash that happened 2 weeks ago, where $1 trillion got liquidated, exchange APIs were overloaded, and orders didn't get executed. If you didn't have multiple exchange venues to execute on, your orders would not go through. If you trade with credit lines, what happens if you exceed your credit limits and you don't have alternative venues to execute on? Also, if you have assets deposited on exchanges, but the exchange API is becoming unresponsive, how do you move your funds to a different venue without significant delay and cost if chains are super congested? As a bank, not being able to ensure best execution at all times results in massive reputation risk, especially during such mass liquidation events. But how do you get around these issues? In short, the answer is diversified execution and settlement connectivity. This will save your reputation beyond such mass liquidation events. But what exactly does this mean? Simply put, best execution in the context of digital asset banking means the ability to buy and sell at the best possible price available in the market at the lowest possible risk and cost. In an ideal world, your digital asset banking system has the following 6 characteristics. 1, market-wide connectivity. It would allow you to minimize operational risk, execution risk, counterparty risk, and liquidity risk cost. And also, it would provide you with full execution privacy. We'll now look at these 6 characteristics in more detail. Number 1, market-wide connectivity. Broad connectivity to multiple exchanges, brokers, and OTC desks is a necessity to ensure you have an available venue to execute on at all times. Diversification is key because it will ensure you get the best possible price in the market, and it also gives you alternative when individual venues become unavailable for whatever reason. The challenge is that exchange APIs are not standardized and many exchanges are not regulated. If banks cannot or don't want to source liquidity from multiple venues and instead limit themselves to a single broker or OTC desks, they will not be able to achieve best execution. Number two,
minimize operations risk. You want to keep the entire trading and pre- and post-trade process as automated as possible. The biggest potential reputational damage and financial loss arises from human failure, such as fat fingers, trades, or wrongful handling of deposit and withdrawal addresses. Automating entire trading and settlement lifecycle also reduces your headcount and operation overhead. The key challenge is that manual order execution and asset transfers to and from exchanges create significant operational risk. As a consequence, banks are challenged by excessive manual overhead and operational risk as long as pre-trade, trade, post-trade processes are not fully automated.
Number three, minimize execution risk. You want to make sure your client orders are executed as fast as possible. Any delay means market timing risk. Ideally, you would want to fund your exchange accounts just before you place an order. Also, you want to ensure you're getting the best price available in the market. This is why you need to be able to source liquidity from multiple venues at the same time. You achieve this by using something called a smart order router. And finally, you need to ensure that large orders don't move the market and that other market participants can't front-run your trades. To get this, you need to split up large orders using execution algorithms like TWAP, VWAP, Iceberg, and Sniper.
Number four, minimize counterparty risk. One of the biggest entry barriers preventing banks from benefiting from low-fee exchanges is the associated counterparty risk. Whenever you want to execute an order on an exchange, you are required to pre-fund an exchange account and lose custody to those assets as long as they are staying on the exchange's hot wallet. Not your keys, not your coins. That's obviously what we all know. In an ideal world, you hold full custody over all your funds up to the very moment your order gets submitted to the exchange's books. Currently, the problem is market timing risk and network fees associated with transferring funds on-chain prior to executing an order. The only current alternative are OTC desks, which often require a minimum monthly trading fee and volume, or brokers who offer credit lines but are usually very expensive. Key challenges is the requirement to pre-fund non-custodial exchange accounts prior to executing an order.
Number five, minimize liquidity cost. So to benefit from best execution on multiple exchanges, each exchange account needs to be pre-funded. The amount of assets locked into exchange accounts increases with each additional venue you trade. So apart from resulting counterparty risk, this also significantly increases the cost of liquidity. So in an ideal world, this multiplication of locked liquidity in exchange-owned hot wallets is kept to a minimum through using a centralized liquidity pool, which can be used to dynamically allocate your fund to an exchange as part of the automated trade execution logic. Last but not least, full execution privacy. As all blockchain transactions are public, it's quite probable that large on-chain transfers to exchanges are being front-run by other market participants, as these on-chain transactions get propagated publicly through the blockchain. So ideally, it should be possible for institutions to privately fund a trade off-chain before executing an order.
So really, in summary, in order to overcome the above challenges, banks absolutely need to streamline secure and private execution and settlement connectivity to a large range of counterparties, such as OTC desks, brokers, and of course, exchanges. As the recent mass liquidation event has shown, relying on a single or just few trading venues can become a very serious issue, and banks should work on continuously extending market connectivity in order to make sure they can always select the right type and amount of counterparties needed to ensure best execution for their clients at all times.
So but why is best execution such a huge challenge in the digital asset space as opposed to the FX market? Well, unlike FX, crypto trading infrastructure is initially retail driven, while institutionalization has only really just started. The crypto space is a 24/7 global market with still immature trading infrastructure. In addition, liquidity is extremely fragmented across hundreds of exchanges, brokers, and OTC desks. So the key to true best execution is to overcome this fragmentation of liquidity and technology on a market-wide level. And this is exactly why we're standing here in front of you. So what's the solution? The solution to overcome liquidity fragmentation is the defragmentation of technology. I'm going to say this again. The solution to overcome liquidity fragmentation is the defragmentation of technology. So in order for banks to achieve best execution, they must stop thinking in technological silos. Instead, they have to look at the different technological components in an integrated manner.
So looking again at these challenges, we believe the key to successful digital asset banking is an integrated approach that unifies the entire trade life cycle with a fully integrated technology stack, including order and execution management, custody, and settlement, all of it connected to your core banking system in a single solution.
So this is why our two companies are collaborating in building an integrated solution that unifies and automates the entire trading life cycle in order to meet all the ideal world criteria banks are asking for. So the Wire1 Fireblocks integration 1.0 has already been built and is being rolled out. In short, it includes automated on-chain, on-exchange balance checks, automated best execution with smart order routing and execution algos, automated exchange deposits and withdrawals, and automated reconciliation with core banking systems. Let's look at how this solution works in practice. A bank client enters an order to buy 1 Bitcoin through the e-banking app, which gets routed to the Wire1 order and execution management. Wire1 automatically checks whether the bank's exchange account, in this case FTX, has sufficient balance to execute the order. At this time, an automated transfer of $40,000 is initiated onto the exchange account through instant fiat transfer networks such as those provided by Silvergate or Signature. As soon as the exchange account is sufficiently funded, Wire1 sends the 1 Bitcoin buy order to the exchange. The exchange then sends a confirmation back to Wire1. Wire1 then automatically initiates a withdrawal of the 1 Bitcoin from the exchange account to the bank's Fireblocks wallet. Once the transfer arrives in Fireblocks, it automatically reconciles the balance change with the core banking system. Now, as you probably noticed, the Wire1 Fireblocks integration 1.0 does not yet fulfill all 6 ideal world criteria discussed earlier. It still exposes banks to counterparty risk, as they still have to hold funds on each exchange-owned hot wallet, and asset transfers are performed on-chain, albeit in an automated way.
Yeah. So this is why Fireblocks and Wire1 are already working on the integration 2.0. which will be the first fully integrated solution on the market, successfully enabling banks to achieve direct market access while enjoying the lowest possible counterparty risk, liquidity cost, and complete execution privacy. So here's a quick high-level look at the Fireblocks technology stack, and there's really 2 things to remember. For one, Fireblocks offers a digital asset custody technology stack, We equip basically you as a bank with defense-in-depth MPC-based custodial technology infrastructure that carries robust policy and multi-user governance. And the second tenet, that's really our digital asset transfer technology network. Basically, we allow you to utilize the Fireblocks network that provides secure payment and settlement rails to over 325 market participants. And here's basically where we currently stand at Fireblocks. We had been scaling operations over the last 2 years, operate globally, and cater to a diverse institutional customer segments that enable, for example, financial institutions like Revolut, BNY, Celsius, or Galaxy to securely build, run, and scale their own digital assets operation through the Fireblocks network and wallet infrastructure. Looking at our 300 plus customers, we have secured assets movements over 600 billion in digital assets with monthly transfer volumes reaching now almost 125 billion per 30 days. On the funding side, we recently closed our Series C round, having raised 133 million from the likes of Cotu, BNY Mellon, and others.
A few words about us as well. Algo Traders is a Switzerland-based fintech software provider. Our product, Wires1, is the leading order and execution management platform for digital assets. We provide connectivity to the largest and most regulated venues out there through a unified API connection. We support both agency and principal trading through components like smart order routing and execution algos. And we've been able to onboard over 120 global clients so far. We're a team of 30 people with offices in Zurich, New York, and Singapore, and we're backed by investors like Credit Suisse, FinLab, Blockchain Valley Ventures, and Verve Capital. This is what the Wires1 Dashboard looks like. It gives you access to all relevant items such as charting, order book, open orders, as well as on and off exchange balances. In addition to the trading dashboard, the entire platform functionality is also available through a standardized Fix API. So that's it from us today. I would like to, if you'd like to learn more about the combined Wires1 and Fireblocks solution, please get in touch with us. Thanks for joining us.
Thank you.
Thank you too for this nice presentation. I'm very happy everything worked out in the end. There would be one short question if you'd like to answer very briefly. I'm not sure if it's too technical to answer briefly, but one of our audience members wants to know, is there a risk of failure from the smart order router side, and how is this prevented? Or how is a failure prevented on
Andy, that's one for you, definitely.
Yeah, I'll take that one. Thank you. Well, the smart order router always trades with multiple venues, and it will, kind of check if these connections are still available, and if there is an issue with any one of them, if an exchange doesn't reply or an order doesn't go through, it'll automatically move to the next one. That's the whole reason why you want the smart order router, that, knowing individual exchanges will have issues, that you still have a few others to work with.
Perfect. Thank you very much, Andy Flury and Tim Bruenjes.